Hi, welcome to this Monday update on markets last week and also this week. So the story of the last week was really the rupee breaking out of its 80 rupee, we call it the BRN, big round number mark. It's gone to about 81 and a half right now, and obviously that's had an impact on the sectors. The other thing was also the fall in crude prices. That also has its impact on sector. So let's go ahead and dive straight in. Uh, so in terms of factor performance, we see that quality, which is defensive in a market in which there is risk on again. Quality is the factor which is standing out. Low volatility again standing out. Value taking a beating, small caps taking a beating, the momentum also taking a bit of a beating, but not too far away from the market. But mainly value stocks, which have taken the beating last week. Month to date, we are still, its value, which is down. Momentum is the best performing factor. Quality is still down about 1.3%, but that's okay, given the gains that it's made up in the last 1 week. And in terms of the year to date, it's small cap, the size factor, which is down the most, still 14% down. The other factors are more or less, they're just basically noise down 1%, up 2%, values down about 3.5%. So that's a bit significant. But small cap is what, where the pain is currently. Which also shows up in the trend. So quality has actually moved into a downtrend from being up for the last 6 or 7 weeks. The other factors, except small cap, are still in an uptrend. But yeah, we are seeing a bit of risk off getting into the markets now. Let's look at the sectors. Obviously, we've seen quality do well. So where has that come from? That essentially come from FMCG and Pharma. Energy is taking a beating because of oil prices collapsing last week. Interest rates, yield spike taking its toll on banking. IT sort of has been okay. I think it's like the spike in the rupee has not benefited IT so much as because talks of recession fears again mean that discretionary spending in IT in the US will be cut. So you're broadly neutral for IT. So IT is still where it is, but energy is the one which sort of had the worst week last week. On a monthly basis, it's still IT, which is down about 6%, and metals, which are up 5%, giving up a bit of its gain. Of course, FMCG is up 4%. Banking down a little bit from last week, but still holding on to 3% gain for the year. Year to date, again, it's still auto, FMCG, energy. So you can see it's a mix of discretionary spending, non-discretionary spending, and economy sensitive. So it's these three sectors which are sort of holding the market where it is, and IT taking the maximum amount of beating till date down back again 31%, where it's been through the year. There's been probably one sector which is realty, which was in an uptrend and has now gone into a downtrend. The other IT, media, pharma still remain in a downtrend. The other sectors besides that, FMCG, banking, auto, metal, finance remain in an uptrend. But let's see for how long that trend remains. This is our monthly risk on, risk off indicator. Currently, we'll update it next week. So probably next week is when we'll have an update on that. But as we saw, quality has gone to a downtrend. So it's pretty likely that we may see 1/3 of risk off in the model next month. But let's not preempt it. A week is a long time in markets, so let's take it when it happens. With that, the disclaimer that this video is for education purposes only and not investment advice. Please consult your investment advisor before investing. And you can follow me on Anish Daily on Twitter at QEDCap and visit us at qedcap.com. This week we'll also be doing a LinkedIn live where we'll do a monthly wrap up and we'll talk about we'll be having a guest also on who and we'll be talking a variety of topics. If you have any questions, please put it in the comment section below or tweet to us on QEDCap or tweet to me at Anish Daily and and we'll set up the LinkedIn live event today or tomorrow, and then you can also send us your questions there. So look forward to having all of you there, and see you soon.